I'm going to be sharing my screen so that we can see the topic that we have for discussion today.
Okay, sir.
Okay. All right. So today we're going to be looking at hydrocarbon tax, which is agreeably the last topic that we're going to be discussing this diet. And I want you to follow me logically because that is how we're going to be looking at this diet. So if you have any question, do not hesitate to call me back or call my attention to the question. Last week we concluded our company's income tax, and I expect that by now every one of us in this class would have also had a past question that you are reading for the purpose of this class. Because it's very important that we have past question so that we can all be on the same page, so that we can all have a feel of the exam, how the exam will look like. So, trying to share my screen. So this is about 53 pages book, or it's an extra from my textbook. So you can actually enjoy the look. Okay. Let me know if you can see my screen.
Yeah, it's up.
Oh, good. So, good morning once again. Today, just like I said, the expectation of this class is that by now, you guys should have gotten yourself a past question that you're going to be reviewing alongside what we have been teaching you. And if you have any challenge with what we have been teaching you, you are free to come up and ask questions, and we will be ready and willing to teach you and explain to you. Okay, just like I said, today we're going to be looking at PIA. What does PIA say? And how are we expected to treat this under examination condition? There are a lot of notes that we have here that I would want you to specifically read on your own. Someone send the charts. Okay. So which I will specifically want you guys to also read up on. Okay. So we're going to be talking about the administration of the Act. What does the Act say? Just a summarized format, because the book is about, the Act is about 280 something pages. So what we just did was to bring up the ones that will be very relevant to this our class, and leave some portion that will not be relevant. The action that is relevant to our section is on fiscal aspect of the act. We have various aspects, but we are more concerned about the fiscal aspect of the act, which is very essential and necessary for us to put this through. Again, we are not going to lose the sight of the fact that Petroleum Profit Tax Act is still in place, even though the examiner has not said anything about petroleum profit tax. But in the practical sense, company has an option of choosing between petroleum profit tax and you also following the Petroleum Industry Act. So they have that option, especially for companies that have their license renewed before the advent of Petroleum Industry Act. So if your license has not expired, you still have the option of either converting to petroleum profit tax, or converting to Petroleum Industry Act, or you continue with your Petroleum Profit Tax Act. So that is that. But for your exam purpose, and I suppose for your exam purpose, you are going to only be focusing on Petroleum Industry Act. One of the things that I shared with ICANN when I had the opportunity of meeting with them was the fact that we know that petroleum profit tax is still in existence, and we also know that we now have a new act in the petroleum industry. Our expectation is that we want ICANN to specifically tell us which of these areas we are going to be teaching. And the reason for me saying this is because we don't want a situation whereby examiner will surprise the students and surprise us, the lecturers, by bringing questions from Petroleum Profit Tax Act. So we don't want that surprise. And at the same time, ICANN is currently also reviewing its syllabus, and most likely for November diets, students might be writing a new syllabus. So I want to urge you to do as much as you can to focus on this your exam. Put every effort for this exam, because it's very important that you pass it and move on to the next phase of your life. Okay, ICANN could be draining. It could be draining financially. It could be draining physically and emotionally and mentally. So it is very important that you focus. For those of you that you are working, I understand our work could be very, very hectic and might not really afford you the time to read your material. But again, just make sure you try your best, put in your best, and God will do the rest. That is my belief. Put in your best, try to read, try. And for those of you that you don't know my story, there was this year in 2004-5, while I was writing my skills level, then we used to call it PE2. I had major issue with performance management. Then we call it management accounting. In my first attempt, I did not do well. I had reference, and it was my own doing. I was one that caused it. Going to the exam hall without adequate preparation for tools might also cause some people's failure. You're going to this exam hall, you need your 2 biro minimum. You need your functional calculator that you have tested. It's very important. And at the same time, you need to be vigilant. So I went to this exam then, and I wrote the exam. Unfortunately for me, I had reference, and what caused my reference was the fact that my calculator that I borrowed a day to the exam malfunctioned, and I did not know. So coming out of the exam hall, when others were rejecting projects, I was accepting, because I've used a very wrong calculator, and at the end of the day, I had reference. Went in to write the second one, I also had reference. During our own time, when you have reference twice, the next one you must pass it. If you don't pass it, you go and write all the 4 papers again. So during the course of my preparing, I have read in and out. Unfortunately for me, again, I would have also failed that exam. But thank God for someone that came to ask me that, Chris, do you understand this particular topic? And I said, Mr. Man, this topic is too simple. Examiner will not be asking it. Lo and behold, that was the number one question the examiner asked. But at the time the guy asked me to explain to him, what I did was to say, okay, let me quickly explain to this guy. Within 5 minutes, I read it and I explained to him. Lo and behold, when we got to the exam, that was question number 1 that came out on the exam day. And I was able to do it perfectly. In PM or MA, you don't even know maybe your answer is right or wrong, especially when you have to use your decision in doing something. So But this time around, I was certain that the answer was correct because it was that question, that same question was in my notes. So I was able to tell that I got the answer right. So what I'm trying to say here is that prepare well for your exam and also put your effort, all your efforts, put it on God's hand. It is only God that can help you scale through because you're not the only one writing this exam. So people will come to that exam hall and, bring all sort of fetish thing that would affect other students writing the exam. We cannot say this does not exist. They do exist. So all I just want you to know is that secure your mental health, pray to God, and pray to the leading of God to direct you in this exam. And I pray God will direct you and will direct your path. For the fact that we are in contact with us, we pray that you will not regret your contact with us. And
Amen.
it's very important that you do
Amen.
and your part is very, very essential. Okay? We are going to do our part. You also do your part. And we're going to be sending out our mock exam very soon. We've had the lecturers start putting up their mock exams so that you guys can have something to read. Okay, and let's go ahead. So as I was saying, Petroleum Industry Act is one of the act that was formed for the purpose of streamlining and bringing everybody on board. For example, the host community, bringing them on board, trying to also make the oil and gas sector efficient and proliferant, trying to also make the oil and gas sector effective. That is one of the reasons why there exists digression or diversion from the petroleum profit tax to the Petroleum Industry Act. It is very essential that we should know that the fiscal aspect is trying to also bringing everybody to tax nets, and at the same time also ensuring that the standard of operations of the oil and gas sector are done in the most efficient way, effective way, and to also make sure that they maintain safety in all their doings. And at the same time, to also ensure that we adopt a best practices that is of international standard. That is one of the reasons why this was introduced. And for the purpose of this, we're going to be looking at the administration of the Petroleum Industry Act. What are the objectives? Now is to promote the exploration and exploitation of petroleum resource in Nigeria for the benefit of Nigerian people. Effective, efficient, and sustainable development of petroleum industry, and to promote safe and efficient operation of transportation and distribution infrastructure of a petroleum industry, promote accountability and transparency, promote liberation of the downstream sector, also to ensure that we have a good business environment in which this industry can thrive. So that is that. Now, for the purpose of this act, there is difference between midstream, upstream, and downstream. Now, for the purpose of this, before now, when we usually do our petroleum profit tax, we talk about upstream and downstream. Most importantly, then upstream used to be under the purview of DPR, used to be under the purview of also NNPC. But fortunately for this act removed all those bottlenecks and established another commission. This commission is the one now in charge of upstream operations. For the midstream and downstream operation, it is now being handled by the authority, and that is why they were highlighted here. We are going to be talking about them as we move on. I'm going to be talking about them as we move on. You can see that I have them in. So now for the admission of the upstream operation, the Act further makes relevant provision for the admission of upstream operations in Nigeria to be administered by the Commission. The Act vests the title to any data and interpretation of results relating to upstream operations in the government of the Federation of Nigeria, and vests its administration to the Upstream Petroleum Regulatory Commission, which is also known as the Commission. Now, what we're trying to say here is that whatever the upstream company does in terms of data gathering, in terms of seismic acquisition that relates to petroleum operation, is vested in the hand of the Commission through its agency called the Upstream Petroleum Regulatory Commission. So the Commission is the one that does that on behalf of the government. Now, there are different licenses that came on board as a result of that could be that the upstream company could have. There are 3 different licenses or leases. Now, before now, under the Petroleum Profit Tax Act, we have the operating mining lease. We have the operating or prospecting license. Those are the 2 that we have. We have these 2 before now. But under the Petroleum Industry Act, we have the Petroleum Exploration License, which gives the licensee the right to explore on a non-exclusive basis for a single renewable period of 3 years. It does not belong to you. You are only exploring. Okay? And this gives them the right to explore on a non-exclusive basis. It is not your own. It does not belong to the company. It belongs to the government. So it gives you the right to explore, see what is there, see whether there are prospects. This other one, which is Petroleum Prospecting License. The license gives the licensee the exclusive rights to drill exploration and appraisal well, do corresponding tests, production, and non-exclusive right to carry out petroleum exploration for a maximum period of 6 years for onshore and shallow water, and 10 years for deep water offshore and frontier acreages. So in this regard, it still does not belong to you, but you can carry on exploration activity for a maximum period of 6 years for onshore and shallow waters, and for the purpose of deep offshore is 10 years. So this gives them the right to drill exploration well and appraisal well, do tests of the production that they have made, and they can do this for a period of 6 years if it is an onshore. Onshore is on top of the water, on top, or on the floor, or sorry, on the ground surface. Meanwhile, on deep water is inside the water. Okay, so that is that. So we move on to the petroleum mining. This gives exclusive rights for you to win and get natural gases, explore on an exclusive basis, and non-exclusive right to carry out petroleum exploration for a maximum period of 20 years. So what we're trying to say here is that you can produce, go ahead and do whatever you want to do. But in terms of your license value, license life, the life of the license is 20 years, renewable at the expense or renewable by government. If they want to renew it, fine. If they are not renewing it, they are not renewing it. So that is what we are saying. It should be noted that only a company incorporated and validly existing in Nigeria may be granted license. Seen above. Responsibility to assign license. The responsibility to assign license is vested in the hand of the minister. Okay? Is vested in the hand of the minister. It's the minister that gives licenses on the recommendation of the commission. Everything that is during the exploration phase, every data acquired on the land, on the acreage, is going to be vested in the hand of the commission. Commission has rights over it. When I say commission now, what I am saying now is what I am saying now is that the commission is the one that has rights over it, over whatever data, over whatever seismic acquisition that you have. Is the commission that has rights over it. So that means it does not belong to the exploration company. It does not belong to the exploration company. Having said that, we'll quickly move on to the next one. You guys going to be reading this on your own. Just, I don't think examiner will want to ask questions from this. It's just for you to have a background information with regards to that. So you're going to be reading it on your own. I want to focus more on the fiscal aspects because that is the essence of this class. But another thing that the examiner could ask you is you should say something about the host community. Now, you remember the introduction of this class. One of the things I told you is that the government, because they want to include everybody, they now said the host community also will be benefiting directly from whatever that is being explored in their community. So in terms of that, the host community is now given the opportunity to be paid 3% of whatsoever operating expenses of the operating company. Okay, for the company that is operating within their community. Their operating expenses, 3% of the prior operating expenses will be given to the host community. Let me say that again. Because of, to stop all these kind of issues that we usually have with the host community, where the host community will go ahead and vandalize properties of the oil company, where the host company will go ahead and destroy so many things, owing to the fact that they are not being carried along, owing to the fact that the oil company are just exploring from their community without them getting any benefits. Therefore, the host community has now been given the right under the tax law, under this PIA, that 3% of the operating expenses of the company that operates in that community should be allocated to a fund set up by this host community of the prior period. So that means for last any expenses that you have incurred, operating expenses, that you have incurred. 3% of such, 3% of such shall be granted to the host community and given to the host community to the fund that they have set up. Okay, to the fund that has been set up. So if that is the case, then we can now say the host community would also need to follow some guidelines for them to benefit from this. Number one, you must maintain peace. You must maintain peace. There are conditions. We are not just giving you this money. There must be peace. There must be peace. There must be no act of vandalism. And there must not be disruption to the activities of the company. If these are kept, the fund shall be made available to the community. But if there is vandalism, if there is civil arrest or damage to petroleum properties or destruction to production activities, this community shall not enjoy from this payments. We will not give them. The company will not give them that year. Okay, so what are the objectives of host community? Just like you have said, to foster sustainability, prosperity within the community. We want the community to also benefit, to provide direct and social economic benefits from petroleum operation to the host community. Now, a question will come from some of you that have been following what is going on in Nigeria. You remember that there was this time where the complaint, where Nigeria, where National Assembly wanted to investigate NDDC. NDDC function is similar to these people, Niger Delta Development Commission. But unfortunately, NDDC has been bastardized. Ordinarily, you remember when they were trying to investigate NDDC, what Godswill Akpabio said that year was that off your mic, you remember. So these are the things that the host community is supposed to be benefiting from NDDC in terms of rehabilitation of their road, in terms of maintaining their waterways and some other things. But they were not doing it. I see this host community development fund, as a double billing. It's just an avenue to just siphon, to waste our money in this country. Because when we have NDDC, I don't see the reason for this host community if NDDC had been doing their duty. But instead of government to scrap it or to make it, to make it more accessible to the people in the community or in the region, for example, but government is not doing that. So they now went ahead and said, okay, let's leave NDDC to be on a general scale, but let's tailor this to this specific community. So they are tailoring this to specific community, although NDDC is supposed to have been doing this. To also bring about peaceful coexistence between the host community and the license holder, to create a framework that supports development of the host community. Now, for this to work, you must establish a fund. The commission must establish a fund. The commission or authority shall establish a fund. Now, this fund, their responsibility to make regulation and guide on how the trust fund will be dispersed, and also to oversight the responsibility for ensuring that projects proposed by the board of the trustee are implemented, and so on and so forth. You need to go and read this. Now, what is the percentage? It is 3% of the actual operating expenditure of the operator in the prior year, in the preceding year. So that is that. Now, this fund that you have given to the community shall not be taxed. Shall not be taxed. And it can be revoked if you did not do, if you constitute any form of disruption to the activity of the company. That's what we have explained it. So you read that on your own. You read it. Allocation of the funds, and 5% of the trust fund shall be disbursed to capital projects, while 20% shall be reserved and 5% for administrative purpose. So those are the things that just go ahead, just go through them and read them. Now, the one that is very essential for us is this fiscal aspect of the Petroleum Industry Act. Now, this talks about the computation of tax liability, which is, of course, what you need to focus on. Now, for the purpose of this act, this brings about dual regime. Dual regime. Before now, taxes paid by a petroleum company under the Petroleum Profit Tax Act was 85%, used to be 85% of their chargeable profits. 85% of the chargeable profits. That was what was usually being paid by the company before. But with regards to the Petroleum Industry Act, the tax rate has now gone down to effectively to about, depending on the type of company you are, to about 60% or 45%, depending on the type of company you are. And we're going to be seeing that as we move ahead. So now in this kind of regime, companies that operate in the oil industry will now be paying two types of tax. They will pay hydrocarbon tax, and they would also pay what we call companies income tax. They will pay hydrocarbon tax. They will also pay companies income tax. And when you're talking about this, one of the things that you need to know is what are the kind of income that will be subject to tax under company income tax. What are the types of income that will be subject to tax under hydrocarbon tax? We are going to be looking at that as we go ahead. Now, the next thing that we need to know is you need to understand when you talk about hydrocarbon tax, it is very essential to understand what we mean by upstream and downstream. What is upstream business and what is downstream? Now, when you say upstream petroleum operation, there are some key things that this petroleum company does. Number one, you talk about exploration. Number two, you talk of development of wells. Number three, you talk of appraisal of wells. Number four, you talk of winning the petroleum operation, that is the petroleum on behalf of the company, obtaining the petroleum on behalf of the company or Nigeria. And number next is production. We can also say production and winning and obtaining is the same thing. The next one is the distribution. Look at what I've said. We talk of extraction, we talk of exploration, we talk of appraisal, we talk of development of wells and platforms, we talk of obtaining and winning the petroleum products, which is the production, and you talk about distribution. Okay, we talk about distribution. Now, When I talk about this distribution, I am talking about the sales of crude oil and natural gas in its natural states. I am not talking about the refined gas. I am not talking about the refined petroleum products. I am talking about crude in its crude state, in its natural state. That's what I'm talking about. Now, for that purpose, when you now talk about the activities of marketing the petroleum products, marketing of the finished products, that would be subject to tax under company income tax. And that could also be the major activities carried out by a downstream company. At times, an upstream company can also be operating downstream, that is marketing of petroleum products. Therefore, such will be chargeable to tax under company income tax. Now, just like I have said the other time, what are the main activities of the petroleum companies? When I say petroleum company, I'm not talking about Judith and Co. Petroleum Nigeria that sells petrol. I am talking about the crude oil. I'm talking about the likes of Shell, the likes of Pillar Oil, the likes of Mobil Producing, the likes of Texaco, which is now Chevron, the likes of Total, not the one that sells petrol. I'm talking of the one that focuses or that focus on the production of crude. Those are the ones I'm talking about. Okay, so these are the activities. Now we have the various classification of costs, which we are going to also go about and read. We have talked about the types of rights before. We've talked about that. You go ahead and read them. Now, just like I said at the beginning of this class, I said for the purpose of petroleum profit tax, for the purpose of hydrocarbon tax rather, we have two types of tax that this company will now pay. The first tax of tax is hydrocarbon tax. The next one is company's income tax. The first one is what? Hydrocarbon. The second one is what? Company's income tax. A minute, please. So I said we have the two types of taxes that this company could be assessed to, which is number one, we talk about the hydrocarbon tax, and number two, we talk about the company's income tax. Now, at what point do we assess the company with tax on hydrocarbon tax? So we're going to be looking at what are the things that constitute the income that will be subject to tax on hydrocarbon tax and the income that will not be subject to tax on hydrocarbon tax. We're going to be seeing them as we move ahead. Now, petroleum industry has introduced dry income tax regime for upstream company, that is the hydrocarbon tax and the company income tax. However, hydrocarbon tax is generally applicable to crude oil profits and profit derived from field condensates and liquid NGLs, that is natural gas liquid, obtained from associated gas to the extent that the underlying field are in onshore or shallow water, produced in the field upstream of measurement points. Now, what are we trying to say here? What is an associated gas? I am going to take your mind back to costing. I'm taking your mind back to costing. In your costing, you did process costing, right? What is normal loss? Who can tell me what normal loss is? Who is that? We can't hear you clearly. Who is telling us what normal loss is? Kindly, what is normal loss? Who is talking now? Nobody is telling us what normal loss is. You cannot remember.
Okay,
Okay.
it is the loss that is already budgeted for or envisaged from the production process.
Victor, smart move. That's not the correct answer.
Okay.
Normal loss will come as a result of the production process that you are not envisaging. It is not as if it was budgeted for. You are going to have budgeted for the normal production, the actual production. But in the course of producing, there are some costs, there are some losses that you are going to encounter. Okay, let me give you an example. When you want to make a furniture, when you're trying to make that furniture, you get wood, right?
Yes.
The wood that you got, they are not into shape that you want. You are going to be the one to what? To make the wood to form whatever you want. It is not your intention to waste those things. But because of the fact that you want to create, you already have something in your mind that you want to create, those losses will occur. It's not because you want them to occur, but they will have to occur for you to bring out the finished products. Those are normal losses. Now, sawdust, for example, when you are doing a woodwork, you will always have sawdust, isn't it?
Yes.
Because you are trying to file the wood must be smooth, so that it will bring out the quality that you want. That is what we call normal loss. It is normal. The loss will occur. This is the same thing with what we call associated gas. As I was producing my crude oil, gas will also come out from the crude oil. So what I am now saying here is that those associated gas, if you go ahead and produce it, any income you make from it will be subjected to what? To tax liability. Will be subjected to tax liability. That's what we call associated gas. Associated gas are the gas that was produced as a result of the production of crude oil. they come alongside as we are producing crude oil. Okay? It is not your intention to produce associated gas. It is not your intention to produce associated gas. But you have to produce, thank you. But you have to produce the associated gas because of the what? Of the crude oil that you are producing. It will come as a result of the production of crude oil. So that is that. So those are the taxes, those are the income that will be subject to what? To hydrocarbon tax. We said number one, crude oil. That is profit derived from crude oil. Number two, derived from condensates. Number three, from NGL. Number four, NGL from associated gas. Okay? So we can easily say associated gas, condensate, and crude oil. Any income that the taxpayer derive from this will be subject to what? To hydrocarbon tax. He said the following will not be subject to what? To tax, to hydrocarbon tax. Number one, associated natural gas, including gaseous nature gas, liquid produced in the field and contain enriched gas, and non-associated natural gas. What's the difference between this and this? They are different. This one is produced from condensate and NGL. This one is produced from natural gas, gaseous natural gas, liquid. This is from condensates. Now, we also said non-associated gas will not be what? Taxable under hydrocarbon. Rather, it will be taxable under company income tax. That's what it means. The next one, condensate and natural liquid gas from non-associated gas. You can see the one that is taxable under this is from associated gas. Look at this one, from non-associated gas. What is non-associated gas? A non-associated gas is a gas that is being produced deliberately for its own use, for its own sales. You are producing it because you want to sell it. Do you understand me? Unlike the other one that was produced as a result of crude oil production, this one was not produced as a result of crude oil production. It was deliberately produced. Then it is not going to be subject to tax under hydrocarbon tax. The last one is a gas produced under downstream. It is not going to be subject to tax under hydrocarbon. That will be subject to tax under company income tax. So all this that I highlighted will be company income tax. Important notes. CIT is applicable to all profits, whether they are subject to tax in hydrocarbon or not. We are less concerned. CIT wants to take everything so that there won't be any way a company will be exempting or escaping from payment of tax liability. Next, the cost of production of auxiliary gas upstream of measurement points shall be deducted or allocated to crude oil for the purpose of computing hydrocarbon tax. Next, where the capital or operating costs for a well are solely for the production of auxiliary gas. Look at this statement. Where a cost or operating costs for a well are solely for the production of auxiliary gas. You want to produce auxiliary gas. That is the reason you have incurred the cost. Such costs will not be allowable under hydrocarbon tax.
Sir,
Yes, go ahead.
sir, please, your cursor is not moving. We barely know where you are reading from.
This is where I'm reading from.
Okay, thank you, sir.
Thank
Also,
you.
sir, this
I am
first
saying,
one.
where
Can I go ahead, sir?
go ahead.
Yes, sir. You said CIT is applicable to all profits, whether the profit is subject to hydrocarbon or not. So does it mean we can charge the company CIT and also hydrocarbon at the same time?
Yes, and that's what I'm saying. Do you understand me?
Sir.
The company
Yes, sir.
that operates under this regime will be subject to tax under CIT and hydrocarbon.
All right, sir.
Give me a minute. Okay, so as I was saying, I said where the capital or operating costs, this is what I'm reading, where the capital or operating costs are solely for the production of auxiliary gas, such costs shall not be deductible or allowable for the purpose of computing hydrocarbon tax. It shall not be allowable for the purpose of what? Computing hydrocarbon tax. So that's what we are trying to say. Rather, it can be claimed under company's income tax. Rather, it can be what? Claimed under company income tax. So that means, if you have said it is not allowable here, it should be allowable under company income tax, right? Only operating costs now, not capital costs. Only operating cost. And any expenses incurred on that will be for the purpose of taxation, will be allowable under company income tax. Do you understand? Yeah. I need to attend to something now. Just give me some minutes. As I was saying, if that is the case, the cost that you have incurred for the purpose of associated gas. Now, what we're trying to say here is that the purpose of your production is for associated gas, not as if the gas came in as a result of you producing crude oil. Then any cost you incurred will not be allowable as deduction. The next one, the Act has effectively resolved the controversy relating to fiscal legislation for condensate. Okay, now let's leave that English. So that is that. Let's go. Hydrocarbon tax. How do we calculate it? Now, we want to start it one after the other. Now, sorry guys, what was it called? Went off. Let me share my screen. Now, for the purpose of hydrocarbon tax, we are saying that the tax will only be applicable to petroleum operations involving crude oil and condensates, natural gas, liquid. Thus, the hydrocarbon tax rate as specified in the Act is between 30 and 25 and 15%. Now, depending on the terrain, if you are still in production mining license, it is 30%. So you have to know the kind of license the company has. If it is PML, production mining license, or prospecting license. If it is prospecting license, it is going to be 15%. If it is petroleum mining license, it is going to be 30%. So that is that. So you can now see the tax rate effectively is going to be between 60% and 45%, unlike in the old tax law that talks about 85% flat on your profits. This is going to be, and government is also doing this to encourage investments in petroleum sector. We move on. So that's the tax rates. So for PML, it is 30%. For PPL, it is 15%. Now, determination of crude oil revenue. We say crude oil revenue and gas revenue to be subject to tax as determined at the measurement points are based on the following: proceeds of all chargeable oil sold by the company and value of all chargeable oil disposed by the company. Let's go. General notes. Where crude oil revenue of the company is less than a product of fiscal oil price, as advised by NUPRC rather, or the commission, the excess of the crude oil volume sold or disposed shall be added to crude oil revenue and subject to tax. What we are trying to say here is that it is possible that NUPRC, they've advised a company that this is the fiscal oil price for this year or for this month, and the company goes ahead and sell below the price that has been advised. What the act is saying is that if that is the case, the company shall be liable to pay tax on the excess of the two, on the difference. So if you like, be selling below the market price, be selling below the price advised by NUPRC. The act is saying that you are going to pay the difference. Okay, so that's that. Incidental income is no longer allowable under petroleum, under hydrocarbon. However, it is going to be allowable under companies' income tax. Now, what is the basis of assessment of hydrocarbon tax? How do you assess this company to tax? You remember when we were doing our company's income tax, I told you to assess company to tax, company shall be assessed to tax on preceding year basis, right? On that company's income tax. In hydrocarbon tax, companies are not going to be assessed to tax on preceding year basis. Rather, the company shall be assessed to tax on actual year basis for a company that operates in upstream business. Their income is assessed to tax on actual year basis. Their income is assessed to tax on what? On actual year basis. Now, when a company is under midstream or downstream, the company will be assessed to tax on preceding year basis. Now, what is accounting period? What is accounting period? We are going to be looking at accounting period in 3 dimensions. The first one, we're going to be looking at an accounting period from a company that is just commencing operation. When a company commences operation, what is the accounting period? The accounting period will commence from the date of commencement to the end of the accounting year. That is, from the day the company commences the bulk purchase or bulk disposal of chargeable oil to the end of the accounting year. Now, the accounting year of a company for upstream business is a period that runs from January to December. So we are saying from the date of commencement to December. That's what we are talking about today. Now, for an existing company, for a company that has been operating for a while, the company shall be assessed to tax from January 1st to the end of the business. That is on actual year basis. It runs from every year. That is commencing from January 1st to the end of the business, for the end of the month. The next one is a company that is ceasing operation. For company that is ceasing operation, definitely the company might have a period that is less than 12 months. So we are saying from January to December, from January of that year to the end of the business life. That is the accounting year, accounting period. So if the examiner asks you to define accounting period, you are writing it in 3 ways, just as I've explained it. The first one, you talk about company that is just commencing. Second one, you talk about company that is ceasing, and the third one is company that has been in business for a while. Do you understand me? So that is that. Okay, having said that, we move on straight to adjusted profits. Now, I'm very sure that we all understand what adjusted profit is, and I have taught you adjusted profit before. It's also good for us to understand what it is here. Now, adjusted profit in this regard is also taking cognizance of all allowable expenses, okay, and at the same time taking cognizance of all taxable income and all taxable income. For example, you bring it in, all allowable expenses you subtract, all non-taxable income you add back, and you remove all non-taxable income rather, and you add back all non-allowable expenses. Now, according to the Act gives us some expenses that are allowable and some that are not allowable. Now, the following are the allowable deduction, which we are going to talk about in the next 10 minutes before we end the class. Number 1 is any amount contributed or approved by the commission for the purpose of decommissioning and abandonment. For the purpose of decommissioning and abandonment. Now, when you say for the purpose of decommissioning and abandonment, we are saying, what is abandonment? What is decommissioning? You let out a house to someone. When you let out the house to that person, the person now repainted it, changed some things in the house, so that it's going to suit him for the purpose the person wants to use it for. Now, what the act is saying is, when you are leaving, you have to restore it back to the way you get it. That's what we call the commissioning and abandonment. So any amount you set aside for this purpose, it is allowed for the purpose of tax liability computation. It is allowed. So let's relate this back to oil company. When an oil company gets to a particular location, they meet their land as a correct and good land. But by the time they start their operation, they will dig, mess up a lot of things, Abi. So the act says they should now be setting aside a certain amount of money, which is not really specified the amount. Set it aside so that when you are leaving that place, when you are no longer exploring, you can restate it back to the way you met it. That is the purpose of abandonment. That's the purpose of abandonment. Restating it back to the way it was met. Okay? That is number 2. Rent in pursuance to petroleum mining license and lease. Okay? So any rent you pay for this purpose is allowable. Expenses directly incurred for the purpose of repair of machineries and plants is allowable. Acquisition, listen to this one very well. Acquisition of geographical, and geometrical data and information is allowable. Royalty is allowable. Tangible and intangible related costs, they are allowable. Now, subsequent appraisal well, another well. Okay, so we are now saying the first 2 appraisal wells are allowable. Tangible and intangible related costs in connection with the first 2 appraisal, in connection with the first appraisal exploration well and first 2 appraisal well is allowable. First exploration well is allowable, and first 2 appraisal wells are allowable. So any other costs apart from this first exploratory well and first 2 appraisal well are going to be capitalized. And in terms of capitalizing it, you have to calculate capital allowance on that. We're going to be talking about that when we move to the next class. The next one, all sums, the liability of which was incurred by the company to the federal government or any state government, by government council by way of levy, duties, and fee is allowable. Cost of gas reinjection to well is allowable. Any amount contributed to the fund scheme arrangements approved by the commission, including host community, Niger Delta, and environmental remediation, they are all allowable. So that is that. The next one is expenses not allowable. Number 1, expenditure and fee incurred as penalty for gas flare is not allowable. When you flare gas, it's not allowable, except if you reinject it. So that is that. Number 2, disbursements or expenses not being money wholly exclusively reasonable for the purpose of the operation. Any expenses incurred which is not for the purpose of petroleum operation is not allowed. Head office costs, shared costs, research and development costs are not allowable. Depreciation not allowable. Expenditure incurred to purchase information relating to petroleum deposits other than acquisition of geographical, geological, and geochemical data information are not allowed. So what we're trying to say here is that when you incur expenditure in purchase of information relating to petroleum deposit is not allowed. The next one is capital employed in making improvements to an asset. That is, you are overhauling or improving the asset. It's not allowed. Sum recovered under insurance commission is not allowed. Insurance or contract of indemnity is not allowed. Capital withdrawn is not allowed. This one is very important. Interest on borrowing, financial and bank charges, attribution, arbitration, and legal costs. Bad debt, they are not all allowed. They are not allowable. Interest on loan is not allowable. Financial and bank charges not allowable. Arbitration and legal costs not allowable. Bad debt is not allowable. So you are not allowing anything. The next one is tertiary education is not allowable. Tax imputed is not allowable. Rent that is not for the purpose of petroleum operation is not allowable. Capital expenditure is not allowable. Private expense is not allowable. Production bonuses are not allowable. And so on and so forth. So you have to go and understand all these non-allowable and allowable expenditure. That's why we're going to stop today. When we meet again next class, we're going to continue from there. Now note that our class might be, I might fix a class for Thursday, public holiday. I might fix a class for Thursday, public holiday. Please bear with me, okay? Good day to you. Any question?
So do you mean Thursday evening or morning period?
Morning period is fine. I can't read you.
Okay, sir.
All right.
Thank
Good day.
you, sir.
Bye.
Thank you, sir, for your time. Blessings.
All right, Rose.
Thank you, sir.
All right.
Thank you so much, sir.
Thank
you, sir. Thanks, Victor. Fidelis, thank you. Judith, thank you. All right, bye.